Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Tuesday, July 9th. Well, the retracement rally continues, has a little bit of legs, and let's see now where this market may be headed. If we're headed actually to retest the highs, we are at right now in the pre-market session up about 6.5 handles, so it looks like we have continued strength. Now, I still think that what I'm looking for is I'd like to see this rally that has happened with a little bit more volume, a little more thrust, a little more conviction. I haven't seen it as of yet. That does not mean that we can't just go higher. But what I am looking for is I'm looking for clues that where this rally may stop and start to roll over again. Now, we haven't had that yet. That's why I always stress, let's not just go out and short the market. Let's have risk on our side. Let's have manage our positions accordingly. And even though we looked at the markets are a bit stretched here, and we have had a pretty good rally, a 3-4 day rally, a 4-day pause, and then now we're on a second leg here. So we want to see and get evidence that the market has in fact started slowing down. Momentum is starting to wane, which it is, but that does not mean that we are looking to just go out and short the market. Can you take an objective short for the day, for the morning session or the afternoon session, or for a day trade? Absolutely. But we don't want to be positioning ourselves short at this time. So I'm going to focus a little bit more on the bonds and euro dollar and the dollar itself. And I want to try to get some clues on where this market may be headed here. Now, in front of us, we have the NYMO, the McClellan Oscillator. And again, we're just sitting right up here in this neutral territory, really not much of anything. So we can go up and or down with plenty of room to run on both sides, okay? That's really all that's telling us right now. When we get to these extreme levels, this is when I would like to look for some sort of a dead cat bounce, retracement rally, and or a pullback when we get up to these lofty levels, okay? Now, as far as that's concerned, let's take a look at the VIX. And VIX, again, subdued, no volatility anymore. There's no fear in the markets again, guys. And that's why I said we broke above here. We would need to hold above 22, 23, and really hold up in this area to tell us that, hey, you know, we have some further downside. But when the markets just popped out of that Bollinger Band here and broke back down again, that's just telling us it was just a little bit of a blip. Now we need to see if the VIX can continue to pick up steam. Now, we don't forget, it's a 200-day moving average on a daily chart, so we've broken below that. So let's see if we break further to the downside to give us one more push. Now, speaking of that, right, I want to say what is going on and how we're going to try to predict or try to get some sort of clues of where this market may be headed. Now, we were talking about the dollar, and I mentioned that the dollar here is really starting to pick up some steam here, right? And we did have a big gap up on Friday, and then Monday we kind of held this resistance line here. I think the dollar is definitely a bit stretched. I think the dollar does come in. If the dollar comes in a little bit, I think that's going to put a bid on commodities and also give further steam to the upside in equity. So I'm looking for a push lower in the dollar, maybe a retest of the highs, maybe 1,700 in equities. That's possible. Okay, I'm not saying we're going to get there, but just letting you know this is what I'm looking for clues. If we get a pullback here in the dollar, right up even to that 8 period, maybe 1 or 2 more days of movement to the upside, and that'll put pressure on the dollar and give us another thrust higher in equities and commodities. And then that would also give us a little bit of movement in our euro. And remember, I did this back in March, I think it was. Actually, no, it was right. March, April, May, I think it was. I'm sorry, right up in here when that right shoulder started to form. So if we do get that, we're here on this neckline right now. Let me just bring this up to you guys. We're here on a neckline at the 128 area. I think we pop one more time. We fill this gap here. And that you could actually even start looking to short the euro right up in this area here. You could do that via an ETF if you don't have a currency account. But this is something that I am going to be looking to do. And if that happens, I'm looking to short the euro and I'm looking to buy the dollar. So we'll have a euro dollar short currency pair, and then you could even buy the dollar itself if you want that exposure if you don't have a currency account. But that's one way of looking at it. So this is what we're looking for now. So maybe you fill the gap up in here and then fail, and you could start looking to leg into an objective short here in the euro. Okay, now we talked about the bonds. Not a bond guy, but remember I mentioned I showed you this here when the 10-year yield was at $2.08, and I said look for a breakout higher, and I said that the yields are done going down, and I think they're done going down for a long, long time. And look at what's happened here just alone in a month. We're at 2.66%. If this continues, Bernanke's going to have a tough time. Now, on top of that, what we want to look for, and we mentioned yesterday on the rotation of bonds, if bonds rotate out of bonds and into stocks, orderly, that's fine. We're going to have continued upside, right? That's going to put a bid in equities because we're going to have further money coming in and buying this market. However, if we start getting some sort of a crash, that is something that we need to be concerned about because that's going to hurt everything. It doesn't matter what asset class it is. Bonds will get hurt along with equities, and that's something that we've got to continue to monitor right now. That didn't happen yesterday. We were up. This morning we were up on the 30-year as well. To one tick higher at the moment. Not much of anything, but we're still holding yesterday's movement. So just a dead cat bounce. But if you look at this is an ugly-looking chart. So we need to really pay attention here, okay, on what's going on with the bonds itself as well as the dollar. Okay, so we're at this area now, right? We said let's look and see if we fill the gap. We did fill the gap, and we are at this area at the 61.8% retracement. I wouldn't mind. This is my area where I'm going to be looking for a sell signal would be right up in here, 166. 166 in the spiders is where I'm going to be looking for a short entry. Now, we need a trigger, obviously, and we need some sort of reversal candle with a topping tail, and then we need to take out the previous, that day's low in order for me to get short. But that's the area where I'm looking to look for a short to see where the market may stall. Now, remember, we don't know if it's going to stall, but if it does, that's going to be a spot where I'm looking for. And if not, then it looks like we're going to probably retest the highs here at 169, 169-ish, give or take, on the spiders. Okay, and just to show you the transports, transports are much weaker than the other asset classes and the other sectors that we follow. However, and that's, I think, partly starting to get a little bit of a pinch on oil. Oil's at 103. We talked about oil. Matter of fact, you know what? I had a few comments, people calling me on oil, and I just wanted to show you this chart here. Here's where I'm looking for an add-on. If you're looking for an add-on, would be a back test of this bigger move higher. Okay, if we can get back below 100, that would be a good spot to look to add to your long position in WTCI crude. Okay, now look at the bullish percent. Bullish percent's right up in here. And I would have liked to see this, and I mentioned this, come right back down to the 20-ish, 30-ish. That would have been a better spot to buy the bullish percent. But now we're at in the 65, 60 percentile, 60 and a half. I would have liked to see it come down a little bit more. But nonetheless, a great trade. And I do think that oil gets to at least 106 to 108, and then we would reevaluate. But look what was happening. We are overbought right now in the short term. So look, I wouldn't be buying anything in here. If you're looking to, I'd be looking to take some profits off of this area and then maybe add back in around right under 100. Let's see that back test and then move higher from there. Okay, that's sorry about that. I wanted to mention that on the gold, on oil. Excuse me. Okay, so now we got the transports here. So that's gonna, I think, taking a little bit of bite out of the transportation sector. But nonetheless, this is our leader, and our leader is kind of lagging a little bit from the S&P. Okay, now take a look at the IWMs on fire. That's what you want. One nice continued movement to the upside. Volume is low, though. If you could see, this is why this is telling me, Mark, use caution here. This is what's telling me. Not that you can't play it. You just got to use caution. Is this really for real, this 7 or 8 day movement we had to the upside? So that's really, we don't know. But although IWM's Russell in the future did make new highs, Russell is at the new highs in the ETF. So let's keep an eye on that as well. And we have, lastly, is the Qs. We're still kind of getting up into this area. We still need to get this downtrend line, break this downtrend line. But again, still productive on where this market has headed. I tell you that it's the market, to me, I think has gone way too further than what I'd like it to be. But nonetheless, if we can get these gap fills, which we've had, right? We've had all of the gap fills now in these sectors. Now the only way where I'm looking for is now a retracement back down to the downside. But again, guys, we're going to need further catalysts and further movement and reason to move lower. As money comes out of bonds and into equities, it's just going to push this market much higher. So that's why I wouldn't be looking to short the market right now at this time. You're probably going to be able to get a better price for it as a short side. All right, guys, that's about it for today. Have a great day. Don't forget, Summer trading is upon us. That means that we are going to be less trading and more waiting. All right. So what did I mean by that? We got to wait for. We do have a kickoff in earnings season that should create some sort of volatility, some gap plays in the morning. But remember, more waiting in our summer trading is very important here. Okay. And I would even reduce share size, reduce risk right now, exposure, until we get a good handle on where the market's headed and we get some good volatility come in. Right now we have no volatility and pretty much a lot of ideas are kind of dried up right now. So we have the summer trading. Let's be patient and let the markets tell you where the next step would be. All right, guys, have a great day. We'll talk to you tomorrow. Take care.